Hello everybody. Today we're going to be talking about tax. Very exciting topic. Maybe not so much for people that own property in Queensland. So let's just go through this article together. Changes in the Queensland tax laws and what does it mean for investors and renters. Long story short is that from the 1st of July 2023, investors who own properties in Queensland as well as other states will be double taxed following the latest changes. You're going to be double taxed. Now, announced during the 2021-22 budget and passed 24th of June 2022, the state land tax of Queensland, investors will be calculated using the total value of a property's owner's Australian land. So what that means is if you own let's say $1 million worth of property in New South Wales, and you then go and buy a $300,000 property in Queensland, the Queensland government is going to tax you for the $1.3 million worth of taxable property, land tax. That is pretty sucky. And it can become very expensive, especially since there are land tax thresholds in different states, and for that piece of land you may not be taxed at all, but by you buying property in Queensland, now it actually triggers that land tax. So this was actually, a bit of a loophole and benefit. Investors were able to before buy property in different states beneath land tax thresholds and didn't need to pay tax, whereas now Queensland property owners, if they were to go and buy tax in different states, they're going to get pinged for each property as well as the one that they own inside of Queensland. Now, it's not going to, the new changes will take effect from the 1st of January 2023 and it be applied to the land tax assessment 23-24 financial year. It could eventually cost owners hundreds, maybe thousands of dollars. For most people, it's not going to be a problem because it's the land tax. I'm assuming it's the Governor General's valuation and not the total retail value of that property, but still it could cost thousands of dollars. So if we go through here, before the new the land tax changes, an investor who owned property owned land in Queensland with a taxable value of $750,000 would be charged nearly $2,000. However, in June 2023, the investor now owns land in Victoria worth $1.5 million, which brings the total value of Australian land to 2.3. So under the new regime, investors' new land tax bill would be $8,400. That's starting to get expensive. Now, if I'm going to make a prediction about this new data, what this would mean to me is investors that have property interstate, investors that have property elsewhere, will probably want to sell their Queensland property because they don't want to then now get pinged for all this additional land tax. And it's going to disincentivize people, one, buying in Queensland, but two, buying land in Queensland. Why I say that is because the taxable component on the land in a unit is much smaller than it is in a house because you've got much more land with a house. Nonetheless, it feels like this is going to disincentivize investors from going into the Queensland market to buy house and land, or even buy units, because buying the one unit could then trigger this land tax event for all the other property that you own. I'll share this article in the link below so you can have a look at it and read for yourself. It's very, very interesting and can be quite expensive for investors. So that's just one more thing for you to be mindful of when you are building your portfolio. If you've got any questions about this, about property investing, reach out to myself or the team. Otherwise, happy investing.